Hello everybody, this is Coach D with TackleTrading.com. Here to give you the stock report and working on the overall picture of the technical analysis. As you use the stock report, it's important that you understand how these little segments work. We've got the 20-year guide, seasonal average, is like the almanac of understanding what the market typically does this time of year based off the last 20 years averaged out. We got a 15-year sector average, kind of a quick guide, and quick guide to best and worst performance by sector. So what we want to do is kind of look at it and understand where we are. Here we are early December, typically showing sideways. I mean, December is bullish on average. It shows early December with a dip and then a run up. So here we are, first week dip, possible run up. Keep an eye on that. As far as strongest sectors, I would say that we'd be looking at utilities and industrials have been the strongest. November was basic materials and industrials. Some of the weaker ones are technology and staples. So that's just kind of an average, best and worst ranked. And we can kind of take it from there. So we'll jump in and start out by looking at the broad market. Here are the spiders, SPY, and I've got this laid out so we can look at a daily time frame and a weekly time frame. Last week, the market kind of, put in a little bit of a hit. We saw Wednesday, Thursday drop, and just a real common scenario when you see a bullish market. I had mentioned that I thought we had kind of a cup and handle type scenario here, and something you have to keep in mind is that there's a very fine line between a breakout and a fake out, and it never really broke out, never closed above the resistance line. But a very simple thing happens when it starts to break support zones and break below candlesticks. Those are intraday pivot points. That starts to trigger stop losses, and you'll notice the volume spiked up a little bit on Thursday, right there. And that happens consistently when you get that first little break of support. You usually get a good candle down because it clears out the trailing stop orders. So people who use trailing stop orders, those are lined up like dominoes. So it just goes boom, 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 boom. You see a spike in volume. Now, what I think is interesting for this week is that Friday, big, strong, bullish candle and above average volume. So closed right near the high, big, strong, bullish candle. And what this really is doing for us is setting up what I would say is probably a little bit stronger cup and handle. You can kind of look at it from a trend perspective, where we got that overall trend resistance there. And then, idea of a cup and handle here is you can look at that as the cup, and then it dropped back about 60% here of the cup, and it's running into here, which gives a little bit of momentum to break through that. Now, whether or not it breaks is the question, and if it breaks, one of the things we need to remember is that let me drop it out to a weekly time frame here, so you can see on the weekly chart that there's still a lot of overhead resistance here. I mean, there is significant overhead resistance still. So even if the market does pressure to the upside, we could see the market still forming a bigger cup and handle here. Very, very cautiously bullish due to the seasonality. Markets tend to be pretty solid through December, January, February, March, April, May. But January and February can kind of whipsaw, and then they run pretty well April through May. Now that's seasonal, and of course it's going to be a little bit contingent and tentative on how the day-to-day information comes out. A lot of last week's movement was very much driven by the ECB and the Fed. And so just kind of put that in mind, keep that in perspective. So let's now drop out and look at the other major market indices. Let's look at the QQQ. And it's at all-time highs here, trading towards the upper end on the daily time frame, trading right at resistance. So again, strong close above average volume. The Russell 2000 traded down hard into a kind of a trend buy zone. You could call it a trend buy zone in that ballpark. Support resistance neighborhood. And typical volume, not overly strong but good. The Dow Jones Again, very, very similar across the board on those. Trading up towards that trend resistance, close near the high, typical volume on the diamonds. UUP, the dollar index. So last week with the ECB, the dollar, the euro really switched hard. You see a big gap on this because it's an ETF, and it came down hard. Boom, heavy volume, and an inside harami, kind of a spinning top style harami, but inside candlestick in the kind of support resistance ballpark. Stayed above its moving averages, etc., etc. So, kind of took a hit here, but I would say I would maintain a cautious bias. If you look at it from a weekly perspective, it's kind of a known support resistance neighborhood. W right in here, where you got double bottom, boom. So then let's drop back out and see where the dollar took a hit down. You'll see the commodities have taken a rally up, but they have a lot of overhead resistance to deal with as well. So the commodities kind of inversely correlated to the dollar. So that's kind of the overall broad market look. Seasonality coupled with the current market conditions, looking at the S&P, kind of contingent on economic news and outlooks. Make sure you check your economic calendar, but Friday's strong close. Let's look at that as kind of a cup and handle type scenario. Trading into trend resistance. For real strong confirmation, watch for a close above the high.